Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from the Singapore Fintech Festival. Joining me for this segment, we have Zhang, founder and CEO of DigiFT, to discuss accelerating next-gen capital markets and tokenization of real-world assets. Henry, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me.
All right, you got it. Then let's talk about tokenized real-world assets. They have the potential to grow to $10 trillion US by 2030. What are some of the opportunities and challenges you see there?
Yeah, we do see there's huge opportunities in terms of tokenized real-world assets, because the real-world assets is vast amount of availability in the market. But with the technology coming up, so-called blockchain technology, tokenization, can create very distinctive value creations to the further tokenize this real assets to provide the transparency of the data and provide efficiency in terms of how to trade. So basically, I see this technology combined with this real assets can substantially increase the accessibility and also the tradability applied to this current very big amount of real assets. So this momentum is just, we see the momentum picking up,
right,
but it's still at the early stage. So there's a lot of room to grow. So 10 trillion, no matter 10 trillion, 5 trillion, or 20 trillion, I think the number will be achieved. It's not about whether or not, now it's talking about when and how.
Do you think the interest in tokenized real-world assets is transient in nature? How do you see this evolving in 2024, and what are some of the key milestones we should look for?
Personally, I don't think it is temporary. It's just kind of one momentum. I think this momentum can be continuous. A couple of reasons, because one is this tokenization of the real assets or digital assets, it does have true value creations. As mentioned, the transparency, efficiency, accessibility, tradability. That's for real. Second is we do see the trend is, you see these well-established financial institutions, they have more and more interest into it, which is very positive. They're looking at a new way to make the investors accessible and tradable. And from the investor perspective, we'll also see the attractions. They're getting more and more interest into this kind of tokenized assets because, again, provide the accessibility to those assets which are not easily accessible, and also make them more easy to trade and in a cost-efficient way.
Let's talk about the regulatory landscape, which is a big topic here at SFF. DigiFT, you enrolled in MAS's FinTech Regulatory Sandbox. How has that collaboration shaped your business approach, and what advice do you have for aspiring digital firms that are looking to get in this space?
Yeah, that's very important. I think first of all, tokenized assets, trade, access these assets, it is part of the financial services, which is a heavily regulated industry. This heavy regulation comes with good reasons. So in this regard, we're doing finance, just in the next generation of finance, next stage. So the way we choose, which we believe is the right way, is to work with regulators and embracing regulations. And also by working with regulators, it does provide clear direction to us in terms of what can be done, what should not be done for the moment. This is very, very important. It is a collaboration. It's not like just a hide and seek type of approach. And also on the other side, regulations itself is always evolving over the time, which was the story in the last decades, in the past decades, and will continue to this kind of evolvement of regulations. So regulators always, like in Singapore MS, they also keep a very open-minded and embracing approach to the new innovations. So Sandbox is exactly the one of the good example to pilot new things which has not been 100% fit into the current regulatory framework, but also it's for the future. But the regulators and the market players like us both need time to practice this, to observe. Then we lead to some more concrete, conclusive kind of outcomes. So we like this approach and we enjoy working with regulators.
As mainstream finance and DeFi continue to converge and grow, how do you envision the next generation of capital markets?
Great. First of all, we think so-called the mainstream finance and the new finance, they're not mutually exclusive. They work together. Second, the new technology, so-called the decentralized DeFi, and also versus so-called the TreeFi or CeFi, centralized finance. Again, they are not mutually exclusive. They are more complement to each other. So I do see the trend of so-called the convergence of TreeFi and the DeFi, CeFi and the DeFi. So the approach, I think the best approach to take is to just combine the best practices of both and combine the best benefits, advantages of both. It's a combination, it's an add-on. It's not like a one to replace all. So in this regard, going to 2014, 2024, and even beyond, I think the trend will continue because the approach take is not one replace another. It is just add on the good features of the new technology and to fit the new demands of the industry.
All right, Henry, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.